Hi, I'm David Merle with Coldwell Banker Capital Gateway, and a question a lot of people ask me is about refinancing their home. And it's a really important question because rates are on the way up. So does it make sense to refinance right now? Well, there's three major reasons you want to refinance. One is to drop your mortgage insurance. That's an insurance policy you're paying for that doesn't benefit you. It benefits the lender in case you default. The next thing is to drop your payment, obviously. And the third thing is to reduce the term of your loan. So you've got a 30-year loan and you're retiring in 15 years. So you want to drop it to a 15-year loan. Those are all legitimate reasons, but let's take a look at each one of them and see when it makes sense to do that. For dropping mortgage insurance, what you need is 20% to 22% equity in your home, and then you can drop the mortgage insurance on a conventional loan, provided you've had it for about 2 years. So you can call your lender and get that automatically reduced or removed. On FHA loans created after 2014, the only way to drop the mortgage insurance is to have 20% equity, and you have to refinance. You have to get a whole new loan to replace that loan. We're in a market right now where prices are increasing enough that I'm having, it's a common practice to a year after someone buys a house to have them refinance and drop the mortgage insurance. So take a look at your home value and you have a good idea whether you should refinance to drop your mortgage insurance. The other reason to refinance is just dropping your payment rates. You bought at a 5% interest rate, and now they're at 4%. In order to compare the costs versus benefits of refinancing, you need to take a look at the cost of refinancing and compare that to how much they're going to save you on the payment. If they're going to charge you $5,000 to refinance a loan, and they're only saving you $100 on the payment, it's going to take a lot of years to pay off that refinance. And if you're only planning on staying in the house another 5 years, taking 10 years to pay off the cost of refinancing may not make a whole lot of sense for you. So take a look at the cost of refinancing, divide the savings into that cost, and that'll give you how many years it's going to take to pay for that refinance. So you can decide whether it really makes sense for you to refinance that, even if the payment can be a little bit lower. The other reason to refinance is to drop the term. So you've got a 30-year loan right now. You're 2 years into it, and really you're going to retire in 15 years, and it makes sense because on a 15-year loan, the interest rate is a lot lower. In fact, when you see those TV commercials, typically they're advertising their 15-year rate, not their 30-year fixed rate. So there's 15 years, there's 20-year fixed rate mortgages, and again, you need to take a look at how much you're saving versus the cost of refinancing. But typically, if you refinance from a 30-year into a 15-year loan, your payment is actually going to go up, but you're going to pay it off in a much shorter period of time, and you certainly want to be able to reduce your interest rate too. If you're not reducing your interest rate, you can still pay it off in 15 years. You just have your mortgage person calculate what payment you need to make in order to pay it off in 15 years with your current mortgage. You can pay extra on your principal every month to pay it off in whatever term you choose. So there you go. That's a scoop on refinancing. Call me with any questions. I'm David Merle with Coldwell Banker Capital Gateway. Thank you.